All right, ready for a deep dive. Today we're tackling the latest financials from Quess Corp. We've got the reports fresh from the Bombay Stock Exchange and the National Stock Exchange of India.
We're talking unaudited results for Q2, the first half of fiscal year 2025, A&D a peek into their investor presentation.
That's right. So first things first, Quess Corp is celebrating a huge milestone.
Over 600,000 employees. That makes them India's top dog in the business services world.
600,000, wow. But there's even bigger news. They're restructuring in a big way.
They're splitting into 3 separate companies. Got the okay from the stock exchange, moving through the legal stuff, NCLT, and shareholders vote on December 9th.
Big changes coming up. But first, let's check their financial pulse. How's Quess Corp doing money-wise?
Well, for Q2 of fiscal year 2025, July to September this year, revenue hit 5,179 crore. That's a 9% jump compared to last year.
Nice. So revenue's up. What about profitability?
EBITDA landed at 196 crore, a 16% jump year over year.
Okay, so they're making money. Anything else standing out?
Their debts shrunk drastically, down to just 253 crore.
That's some serious financial discipline. But hold on, I see a little red flag in the auditor's report.
Yes. The auditor gave a qualified opinion on the financials. There's some uncertainty around tax deductions, Quess Corp claimed.
Oh. What does qualified even mean in this context?
Basically, the auditor's not fully on board with how Quess Corp handled those deductions. They're in a legal fight over it, a pretty big one, involving $1,631.07 million. We got to keep an eye on this, as the outcome could definitely affect future financials. And this isn't the first time it's come up. It's been in previous reports, too.
So, a bit of a question mark there. But hey, Quess Corp isn't just about numbers, right?
Definitely not. They're making a real impact. Their reports show they helped over 96,000 people land their first formal jobs in just 6 months.
That's amazing. What else are they doing?
Their CSR initiatives are supporting education and well-being for over 15,000 students.
Okay, so creating jobs, giving back. They're ticking a lot of good boxes. Now, let's get a peek behind the scenes. What's their game plan?
Time to crack open the investor presentation. They've been busy with divestments, selling off parts of the business to sharpen their focus, and they've been successful, too, with a 28% internal rate of return.
Streamlining for success. Makes sense with a demerger coming up.
Exactly. And remember that debt reduction. It's been a huge priority. They've slashed debt from over 1,100 crore in fiscal year 2020 to just 253 crore now.
Wow, talk about a turnaround.
And they're not stopping there. They're sitting pretty with a net cash position of 334 crore. That's financial strength right there.
Absolutely. They're in a great spot.
Margin expansion's another big focus. In Q2 FY25, they saw a 20 basis point improvement compared to last year.
So they're growing A&D, becoming more profitable. That's the dream combo.
Right. And this demerger, it's all part of their plan to unlock value. Each new company can laser focus on its strengths.
Okay, let's break down these future companies. Starting with workforce management, what's the story there?
Workforce management is a powerhouse. In Q2 FY25, they brought in euro 3,747 crore in revenue, a 13% increase year over year, and a 3% jump compared to last quarter. EBITDA's sitting pretty at 92 crore for the quarter.
So steady growth, good earnings, they're on a roll. Where's this success coming from? New business.
You bet. They snagged 128 new contracts, 74 of those from general staffing alone.
That's huge. What's the value of these new contracts?
So we're talking euro 101 crore in annual contract value. Shows strong commitment from their clients. Most activities in sectors like logistics, manufacturing and industrials, BFSI, banking, financial services and insurance, and retail.
Nice mix of industries. Not putting all their eggs in one basket. What about their IT staffing division? Similar story.
IT staffing's a mixed bag. The Gulf Cooperation Council, GCC region's a star, bringing in 68% of their revenue.
Wow, GCC is booming.
It is. But they're facing some headwinds in the Asia-Pacific, mainly visa issues.
The global landscape can be tricky.
It can, but they're managing. Their days sales outstanding, DSO in general staffing, improved to 24 days, showing good cash flow management.
Okay, so they're staying on top of things.
Right.
What about their operations? Any interesting insights there?
They've added a lot of associate employees in general staffing, over 30,000 from Tier 3 and beyond cities. Great for job creation in those areas. And they're actively hiring 22,000 open positions in general staffing and around 1,500 in IT staffing.
So expansion mode. Any areas for improvement?
They're focusing on improving onboarding in their IT staffing division, particularly in the GCC region, targeting higher margins there and specializing in niche skills. They've also been restructuring, investing in sales, account management, and sourcing. Strategic moves to optimize things.
Smart. It's not just about growth, but smart growth.
It's
Let's dive into their workforce management platform. How's it structured?
divided into 4 parts: general staffing, IT staffing in India, overseas staffing, and others. General staffing is the big kahuna, 97% of revenue and 84% of headcount.
So general staffing's their bread and butter. Got it.
Yeah.
What does their customer base look like in general staffing?
Pretty diversified. The top 10 customers make up 48% of revenue. The next 40 bring in another 26%. So they're not overly reliant on any one client.
That's good for stability. What sectors are they focusing on in general staffing?
BFSI is leading the way, 29% of revenue, followed by retail at 27% and industrials at 16%.
Makes sense. Aligns with those new contracts they're winning. What about their IT staffing sector? Where's that focused?
IT staffing has higher customer concentration, 44% of their revenue from their top 10. Sector-wise, it's heavily ITITES at 81%. Remember how well the GCC region's doing?
Yeah, they're killing it in GCC.
Right, so it's a specialized niche within ITITES. Makes sense given GCC's tech-driven economy. Let's look at how their domestic IT staffing is doing across different regions.
Okay, what are we seeing?
The GCC's share of revenue has skyrocketed from 26% in Q2 FY23 to a whopping 68% in Q2 FY25.
Wow, that's massive growth.
It is. Meanwhile, the IT sector in India has dropped from 65% to 37% in the same time frame.
So a clear shift towards GCC. How's that impacting new hires and headcount?
GCC's driving the bus there too. They account for 43% of new hires in Q2 FY25, while India's IT sector contributed 34%. Headcount distribution's similar, 54% of IT staffing employees in GCC, 31% in India's IT sector.
Looks like GCC's the place to be for them right now. All right, let's move on to Global Technology Solutions. What's happening there?
Global Technology Solutions is another strong area. Revenues at 625 crore in Q2 FY25, a 7% year-over-year increase and a 2% bump from last quarter. EBITDA is also up 5% year-over-year, landing at 109 crore.
They're on a roll with growth. It seems like Quess Corp has a knack for finding these successful niches.
They do, and they're strategically investing in automation, analytics, and AI and global technology solutions, plus focusing on improving margins in non-voice operations.
So embracing tech to streamline and boost profits.
Yep. And their international business mix at Allsec, their subsidiary for customer lifecycle management, CLM, and human resource outsourcing, HRO, has jumped to 62% in the first half of FY25, up from 56% last year.
Expanding their global footprint. Ambitious. Are they attracting new clients in Global Technology Solutions?
Absolutely. They've added 53 new contracts with an annual contract value over 117 crore. They've also seen 14% year-over-year growth in voice services, mainly from BFSI and e-commerce.
Wow, they're killing it. What about their operational performance in Global Technology Solutions? Any noteworthy metrics?
Their revenue per employee has stayed pretty consistent at 119,000. This indicates stable productivity. Also, there's a gradual shift towards CLM and non-voice BPO services, which now make up 51% of their Global Technology Solutions revenue. That's up from 46% last year.
So focusing on higher value services, how are their HRO operations doing?
HRO at Allsec's growing well. The number of records processed is up 7% year-over-year, hitting 43.3 lakhs in Q2 FY25.
Good to see that momentum. Tell me more about the composition of Global Technology Solutions. What service categories are we talking about?
There are 4 main ones: CLM, non-voice BPO, IT and infrastructure services, and platform services. CLM and non-voice BPO are leading the charge, making up 51% of revenue in Q2 FY25. IT and infrastructure services are at 30%, and platform services at 12%.
A good mix of services. What's the customer base like in Global Technology Solutions?
Pretty diverse here. The top 10 customers represent 50% of revenue. The rest is spread out across a variety of clients.
And sector-wise, where's the action?
BFSI is dominant at 52%, followed by ITITES at 17%, and telecom media at 6%. Industrials are at 13%, and retail FMCG at 8%.
So BFSI is their sweet spot. Geographically, are they mostly domestic or international?
India's the big one, bringing in 73% of their revenue. North America's next at 23%, and the remaining 4% is from other parts of the world.
So a growing international presence, particularly in North America. All right, let's shift gears to operating asset management. How's that platform performing?
Operating asset management is showing solid growth. Revenue hit 768 crore in Q2 FY25. That's a 9% increase year-over-year and a 5% jump from last quarter. EBITDA also saw a healthy 6% year-over-year increase, reaching 37 crore.
So they're on a positive trajectory. What are some of the key developments shaping this segment?
They've secured 48 new contracts with an annual contract value of 44 crore. Industrials, healthcare, and ITITES are the key sectors driving this growth. They're also focusing on improving EBITDA margins, driven by their food and beverage and telecom active infrastructure segments.
So they're capitalizing on opportunities in these growing sectors. What other strategic initiatives are they pursuing within operating asset management?
They're investing in sales and leadership to target high margin and growth sectors. They're also emphasizing a healthy associate to core ratio, which is currently above 100. This means they have a strong operating model with a low cost to serve.
So they're being smart about how they grow. Let's take a closer look at the breakdown of their operating asset management platform. How are their services structured?
They've got 5 main service categories: integrated facility management services, IFMS, security services, industrial services, telecom network services, and others. IFMS is the biggest, bringing in 59% of their revenue. Security services follow at 18%, and industrial services contribute 8%. Telecom network services and other services account for 10% and 5%, respectively.
A nice mix of services within asset management. Now, let's examine their customer base. How concentrated is their customer base in this segment?
Operating asset management has a very diverse customer base. No big concentration risks here. Their top 10 customers only make up 26% of their revenue. The majority comes from a wide range of clients.
It's a good sign. What about their sector concentration?
ITITES leads at 12%, then education at 13%, and industrials at 23%. BFSI and real estate contribute 14% and 9%, respectively. Telecom, healthcare and hospitality, and other sectors make up the rest.
A broad mix of sectors. Looks like they're strategically positioned to serve a variety of industries. Okay, let's move on to their product-led business segment. What's the latest on that front?
Product-led business, mainly driven by their Found It platform, is showing some growth. Revenue reached 39 crore in Q2 FY25, a 12% increase year over year. They're not profitable in this segment yet, though, with an EBITDA loss of 8 crore for the quarter.
So a bit of a different story compared to their other segments. What's happening with their product-led business?
They're focused on scaling their Found It platform to grab more market share. Found It, their online talent acquisition platform, is seeing good growth. Sales are up 11% year over year, and they have a 100% order renewal rate, which shows their customers are happy.
It's good to see that focus on growth and customer retention. Any other notable achievements or highlights from their product-led business?
They're proud to say that Found It has the highest ever number of jobs on its platform right now, around 900,000 job postings.
That's impressive. It sounds like Found It is gaining traction in the online recruitment market.
It is, and they've been recognized for their great workplace culture, ranking in the top 50 best workplaces for millennials in India by Great Place to Work, GPTW, for the second time.
It's always good to see a company get recognized for how it treats its employees. Let's dive into some Found It metrics. What kind of user engagement and activity are they seeing?
Their Found It platform has seen impressive growth in candidate engagement. New search profiles are up a whopping 141% year over year, hitting 6.9 million in Q2 FY25. For recruiters, job postings are up 16% year over year, reaching 24.7 million.
It definitely seems like Found It is catching on. Are there any specific initiatives or strategies they're using to make their platform even better?
They've been improving their registered profiles by mapping sourced profiles, which helps recruiters get a better view of potential candidates. They've also added AI-driven features like Pre-PAI 2.0, which gives job seekers personalized interview prep.
So they're using technology to improve the experience for both sides of the market. Are there any other notable trends or metrics we should be aware of?
Their 6-month active users dipped a little, down 3% year over year to 86 million in Q2 FY25. But their customer satisfaction, CSAT, has stayed high at 90%. They've also got initiatives to boost recruiter and seeker engagement, like their FYI, Found It U&I series, and Recruit events.
It sounds like they're actively working to keep users engaged and happy. Okay, let's zoom out and look at Quess Corp's overall financial performance. What are some key takeaways from their income statement?
Their consolidated income statement shows a steady upward trend in revenue, reaching 5,179 crore in Q2 FY25. That's a 9% year-over-year increase and a 4% increase from the previous quarter.
So steady growth at the top line. How about their profitability? Are they managing their expenses well?
Their reported EBITDA is also trending upwards, hitting a 196 crore in Q2 FY25. That's a 16% year-over-year increase and a 4% increase from the previous quarter. This gives them an EBITDA margin of 3.8%, which is a 23 basis point improvement year over year.
That's a good sign. What about their net profit? Are they turning that revenue growth and improved margin into more profit?
The reported profit after tax, PAT, has jumped significantly, reaching 94 crore in Q2 FY25. That's a 32% year-over-year increase. Their PT margin is now 1.8%, a 31 basis point improvement year-over-year.
Those are some seriously impressive numbers.
They are. It shows they're growing revenue, managing costs well, and making good profits. Their diluted earnings per share is also up, reaching my 6.1 in Q2 FY25. That's a 26% year-over-year increase.
It's great to see a company executing its strategy so well and achieving these kinds of results. Now, let's take a look at their balance sheet. What does that tell us about their financial health?
Their balance sheet shows financial strength and stability. Their fixed assets and intangibles have stayed pretty stable over the past year at around 1,685 crore as of September 30, 2024. Their other non-current assets are also steady at 905 crore.
So no big changes in their long-term assets. What about their current assets? Any significant trends or changes there?
Their current assets tell a story of growth and good working capital management. Their trade receivables and unbilled revenue have increased to 3,046 crore as of September 30, 2024, which reflects their expanding business. Their cash and cash equivalents are healthy at 587 crore, even with their investments in growth and debt reduction.
So a good cash position to support their future plans. How about their debt levels? Are they managing their liabilities well?
Debt reduction has been a big focus for Quess Corp, and their balance sheet shows they're doing well. Their total debt has dropped significantly to euro 253 crore as of September 30, 2024, down from 369 crore at the end of the last fiscal year.
That's a big reduction in debt.
It is. Their other liabilities have increased to 3,075 crore as of September 30, 2024. This is probably due to their growing operations and operating expenses. Overall, their balance sheet is a picture of good financial health. They've cut debt, kept a good cash position, and managed their liabilities effectively. They've got a strong base for future growth.
A solid foundation is important for any company that wants to succeed in the long term. Now, let's look at their statement of cash flows. What can we learn about their cash generation and how they use it?
Their statement of cash flows gives us some valuable insights into their cash management practices. It shows that they're good at generating cash from their operations. In the first half of fiscal year 2025, they generated 358 crore in cash from operations, even with all the challenges and uncertainty in the global economy.
So they're generating healthy cash flow from their main business activities. How are they using that cash? Are they reinvesting it in the business or prioritizing something else?
Their cash flow from investing activities shows they're committed to making strategic investments and pursuing growth. In the first half of fiscal year 2025, they invested 47 crore in property, plant, and equipment, which shows they're expanding their operations. They also invested euro 39 crore in subsidiaries and associates, which supports the growth of their portfolio companies.
Strategic investments are key for long-term growth. What about their financing activities? Are they raising capital, paying back debt, or paying dividends?
Their cash flow from financing activities shows they're focused on paying down debt and giving back to their shareholders. In the first half of fiscal year 2025, they paid off 117 crore in debt, which strengthens their financial position. They also paid out 119 crore in dividends, which shows they want to share their success with their investors.
It's a balancing act between investing for growth, reducing debt, and rewarding shareholders. It seems like they're handling those priorities well. Now, let's take a closer look at their segment reporting. How are their different segments doing in terms of revenue and profitability?
The segment reporting gives us good insight into the performance of their four main platforms. Workforce management has consistently shown strong revenue growth, hitting 3,747 crore in Q2 of fiscal year 2025. They've maintained a steady EBITDA margin of about 2.4%.
So workforce management is a reliable part of their business. How about global technology solutions?
Global Technology Solutions is also doing well, with revenue reaching 625 crore in Q2 of fiscal year 2025 and a strong EBITDA margin of about 17.5%. They're experiencing strong growth, driven by their focus on technology and expanding their global presence.
Another strong contributor to their overall success. Let's move on to operating asset management. How are they performing in that segment?
Operating asset management is on a positive trajectory too. Their revenue reached 768 crore in Q2 of fiscal year 2025, and they have a steady EBITDA margin of about 4.8%. They benefit from their diverse range of services, strong customer relationships, and strategic investments in high-growth sectors.
So they're well positioned to capitalize on opportunities in the asset management space. Now let's turn our attention to their product-led business segment. How is that segment evolving?
Their product-led business, mainly driven by their founded platform, is still in its growth phase. Revenue reached 39 crore in Q2 of fiscal year 2025. They're not profitable in this segment yet, but they're working on scaling their platform, growing their user base, and ultimately becoming profitable.
It's exciting to see their commitment to innovation and their efforts to build a successful product-led business. Now, let's look at Quess Corp's journey over the past 17 years. How has the company changed and transformed over this period?
Quess Corp's journey has been marked by impressive growth, strategic acquisitions, and a constant focus on innovation. From 2007 to 2013, they mainly focused on HR services, including staffing, skilling, and recruitment.
So they built a strong foundation in HR services. What kind of growth did they see during that time?
They achieved a revenue of 1,000 crore and an EBITDA of 42 crore with a headcount of 61,000.
So a good start. How did they expand beyond that initial focus?
From 2014 to 2018, they broadened their services, adding more business services. This included expanding their staffing and recruitment, moving into security services and tech services, and growing their presence in facility management, industrials, business process management, BPM, and human resource outsourcing, HRO.
So a period of diversification and growth. What were the results like during that expansion phase?
Their revenue jumped to 6,100 crore, EBITDA hit 354 crore, and their headcount grew to 262,000.
That's a significant leap. How do they keep evolving in a changing market?
From 2019 to 2024, they focused on creating integrated platforms to improve their service delivery and reach more customers. This led to the creation of their four main platforms: workforce management, operating asset management, global technology solutions, and product-led businesses.
Smart move. They recognized the power of technology. What impact did this platformization phase have on their growth and financial performance?
Their revenue went over 19,000 crore, EBITDA reached 695 crore, and their headcount grew to 597,000.
That's incredible growth. They've really leveraged technology to become a leader in the business services industry.
Absolutely. It shows their vision and adaptability.
Okay, let's talk about their synergistic platforms. How do their services work together?
They're organized into four interconnected platforms, each with its own focus and expertise. Workforce management offers general staffing, professional staffing, overseas staffing, and their talent platform.
So they've got all their workforce needs covered. What about their operating asset management platform? What do they do there?
They provide solutions for managing and optimizing physical assets, including facilities management, security, industrials, and telecom asset management.
That's essential as businesses grow. What about their global technology solutions platform?
They use their technology skills to offer services like CLM, non-voice BPO, HRO, InsurTech, and IT and digital infrastructure services.
Strategic. Businesses need technology to stay competitive. And their product-led business platform. What's special about that?
It's driven by their founded platform, an online talent acquisition platform that connects job seekers and employers.
That's a powerful tool in today's digital world. They claim to be India's biggest business services provider. What evidence is there to support that?
Their scale and reach across different industries back up that claim. In workforce management, they're the #1 staffing player in India and a global top 5 by headcount. They helped over 96,000 people get their first formal jobs in just the first half of fiscal year 2024.
Those are some seriously impressive stats. What about their global technology solutions platform? How does that factor in?
Global Technology Solutions has a big share of the domestic BPM market. They process 1.4 million pay slips a month and handle over 660 million customer connections every year. Their InsurTech services have helped underwrite over $3.3 billion in gross insurance premiums.
Wow, that's huge reach and impact. What makes their operating asset management platform stand out?
It's their comprehensive services and vast experience. They manage 360 million square feet of space, serve 3 million meals a month, have upgraded 110,000 telecom sites, and manage 2,000 megawatts of power generation.
They're clearly a major player in asset management.
Yeah.
And their product-led business platform. What sets them apart there?
It's all about their founded platform, which is the #2 job board platform in India. They've got over 21.6 million active users in the last 6 months, 22.6 million in monthly traffic, and 5.5 million profile updates.
They've definitely built a successful online talent acquisition platform. What's their vision for the future? What are their main goals and aspirations?
They have three big ones. First, they want to become the largest staffing company globally.
Ambitious. What's next?
Second, they want to build a BPM and customer experience company with over $1 billion in revenue.
So they're focused on technology-driven solutions and understanding customer lifecycle management. And what's their third goal?
Their third goal is to take advantage of the opportunities in building a new India. They want to capitalize on India's rapid economic growth and contribute to key sectors like infrastructure, manufacturing, and services.
So they're aiming for profits A&D, a positive impact. What's their fourth goal?
Their fourth goal is to grow their Found It platform and grab a bigger share of the online talent acquisition market. They'll do this by adding more features, growing their user base, and attracting more employers and job seekers.
I like their commitment to innovation and their belief in technology. Now let's talk about their three-way demerger. What's the reasoning behind it, and what impact will it have?
It's a bold move to unlock value for shareholders and set up each new company for success. By creating separate entities with clear focuses, they can streamline operations, improve management, and tailor strategies to specific markets.
So more focused and agile businesses. How will this change their corporate structure?
Three independent companies will emerge, each with its own management team, board of directors, and priorities. Quess Corp Ltd will keep running their workforce management platform, general staffing, professional staffing, overseas staffing, and their talent platform.
So the core workforce solutions stay under the Quess Corp name. What about the other two companies? What will they focus on?
Digitide Solutions Limited will take over business process management, BPM, and customer experience operations, including their Connect, Allsec, and Brainhunter subsidiaries. They'll focus on tech-driven solutions for business processes and customer engagement.
Tech-focused Digitide Solutions.
You got it.
And the third company?
Blue Spring Enterprises Limited will handle facility management services, FMS, industrial services, and investments. That includes their Terrier Security Services and Vedang Cellular Services subsidiaries. They'll provide asset management solutions for physical infrastructure.
Asset-focused Blue Spring Enterprises.
Yeah.
Makes sense. What about the shareholders? How does this affect them?
Quess Corp shareholders will get shares in all three new companies based on their current Quess Corp ownership. They'll benefit from the value created by each independent company.
Sounds like a win-win for shareholders. What's the timeline for this demerger? What are the key milestones?
They're moving quickly. They filed their scheme of arrangement and got board approval in Q4 FY24. Stock exchanges gave their NOC, no objection certificate, in Q2 FY25, and they filed their NCLT, National Company Law Tribunal, application right after.
They're not wasting any time. What's next?
NCLT gave first motion approval for the demerger in Q3 FY25, so now they can have shareholder and creditor meetings. Those are scheduled for December 9, 2024. That's a big step to get the approvals they need.
December 9th, a date to remember. What happens after those meetings?
If they get those approvals, they'll file their petition with NCLT, along with reports from different regulators. They expect a final hearing in Q4 FY25 and hope to get the final NCLT order in Q1 FY26.
So Q1 FY26 is the target completion date. What happens after that NCLT order?
They'll apply to list and trade shares of Digitide Solutions Limited and Blue Spring Enterprises Limited on the stock exchanges. That way, shareholders can trade their shares in the new companies.
Sounds like a well-organized plan. It'll be interesting to see how this shapes their future. Now, let's talk about their commitment to ESG, environmental, social, and governance principles. How are they incorporating those into their business?
Quess Corp is actively integrating ESG, showing their commitment to sustainability and responsibility. Their Q2 FY25 report outlines their ESG progress, highlighting achievements and initiatives in three areas: the people company, responsible citizen, and trusted institution.
A holistic approach to ESG. Let's start with the people company. What are they doing there?
They're creating a diverse and inclusive workplace, nurturing a positive work environment, and making job searching digital to empower job seekers. Over 115,000 of their employees are women, that's 37.4% of their core workforce, and 18.2% of their associate workforce.
That's a good commitment to gender diversity. What else are they doing for a positive work environment?
They've been recertified as a great place to work for 2024-25 and recognized as one of the best workplaces in health and wellness by GPTW. They're also promoting digital job searching. They had over 5,000 job openings per month in Q2 FY25 and filled over 99% of them. Their Q Jobs platform registered over 155,000 candidates in Q2 FY25.
So creating a positive workplace, A&D, empowering job seekers. What about the responsible citizen pillar? What are their main initiatives there?
They're focusing on improving schools, giving academic support, and promoting health and well-being in the communities where they work. They've adopted 75 government schools, helping over 15,000 students by providing basic facilities and improving the learning environment.
Making a real difference in those communities. What are they doing specifically for academic support?
They've given out over 14,000 school bags and 8,000 notebooks to make sure students have the basics. They've also run life skills programs for over 12,000 students and trained over 6,000 in computer skills.
Preparing them for the future. And what about their health and well-being initiatives?
They have a health and well-being program that includes yearly health checks for over 7,000 students, dental treatment for over 3,000, and glasses for 261 students. They've also helped over 400 students with social and emotional issues.
It's great to see a company investing in the health and well-being of young people. Okay, let's move on to the third pillar, trusted institution. What's their focus there?
They're prioritizing environmental management, responsible waste management, biodiversity, and ethical business practices. They got ISO 14001 certification for their environmental management system.
So they're serious about minimizing their environmental impact. What about their waste management and biodiversity efforts?
They've disposed of over 2,600 kilos of e-waste responsibly and planted 500 trees.
Good steps towards environmental responsibility. How about their ethical standards and governance? How do they ensure transparency and accountability?
They have ISO 37 Author 1.2001.201 Thien and ISO 9001.201.201 Fee certifications for quality, information security, and anti-bribery systems. They also have a strong code of conduct and a cybersecurity council led by senior management.
So they're taking a multi-layered approach. Any other notable achievements for a trusted institution?
They had zero complaints about data privacy, cybersecurity, anti-bribery, or conflicts of interest in Q2 FY25. Shows their commitment to ethics and compliance.
That's impressive. Now let's talk about their platform-based business model. How does it set them apart from traditional business services providers?
It lets them scale quickly, offer innovative solutions, and create network effects that benefit everyone. Their platforms connect businesses with talent, manage assets, and streamline processes, creating a smooth, integrated experience.
A win-win for everyone. How does this benefit their clients?
Clients get access to a large talent pool, efficient workforce management, streamlined HR, lower costs, and innovative solutions that boost business processes, improve customer engagement, and drive growth.
A one-stop shop for their workforce and operational needs. How does it benefit their workforce?
The workforce gets access to lots of job opportunities across industries and locations. They get tools and resources to improve skills, manage careers, and access benefits. The platforms create a sense of community and offer opportunities for collaboration and growth.
Empowering and supportive. What are some examples of how their platform-based approach is driving innovation?
A great example is their Q Jobs platform, connecting job seekers with blue-collar jobs. Q Jobs helps people find jobs quickly, reduces unemployment, and helps businesses find talent.
A win-win. Any other examples?
Their WorkQ WorkTech platform lets businesses manage their workforce remotely, assign tasks digitally, and track productivity. It helps optimize workforce management, cut costs, and boost productivity. For employees, WorkQ provides transparency and a more efficient workflow.
Technology that improves both efficiency and engagement. What other platforms are they using?
Their Found It platform is another great example. It connects white-collar job seekers with employers. It uses AI to match candidates with jobs, making recruiting more efficient.
Disrupting the traditional recruitment model. Now, let's zoom out and look at their impact on India. How are they contributing to India's growth?
Quess Corp is playing a big role in India's economy and society by creating jobs, teaching skills, and supporting key industries. Their focus on first-time formal employment for people in smaller cities is especially important for inclusive growth.
So they're creating pathways for economic empowerment. How are they preparing people for the future of work?
They're actively involved in skill development. Their WorkQ platform offers digital training modules, giving employees chances to upskill and reskill.
Helping their workforce adapt to the changing job market. How are they contributing to key industries?
They work across many sectors: ITITES, BFSI, manufacturing, retail, and infrastructure, supporting their growth. Their services help businesses find talent, and their asset management and technology solutions improve efficiency.
They're truly woven into the fabric of the Indian economy. What about their social impact? How are they making a difference in their communities?
Their commitment to social impact goes beyond their business. Their focus on improving schools and supporting underprivileged students shows their dedication to future generations.
investing in education for a brighter future. What other CSR initiatives do they have?
They also have health and well-being programs in underserved communities, like eye camps, dental camps, and health awareness programs.
Taking a holistic approach to CSR. What else highlights their social responsibility?
They've been active in disaster relief efforts too, showing their empathy and support for those in need.
It's great to see a company that prioritizes social impact. Now let's discuss their investor relations. How do they engage with their investors?
They're very transparent and proactive in their communication with investors. They give regular updates on financials, strategy, and ESG progress. Their presentations, earnings calls, and annual reports give a lot of insight into their business.
So they're keeping investors in the loop? What else are they doing?
They go to investor conferences and roadshows, giving investors a chance to ask questions directly. Their website also has a dedicated investor relations section with easy access to financial info, governance documents, and other resources.
A multi-pronged approach to communication. Now, what about their competition? Who are their main competitors and what are their strengths and weaknesses?
Business services is a competitive industry, with lots of players fighting for market share. Quess Corp competes with companies in India and internationally. Some of the main ones are Adecco, Randstad, Manpower Group, Team Lease, and First Meridian.
A diverse group of competitors. What are Quess Corp's advantages?
One big advantage is their broad knowledge and experience across many industries. They know the Indian market well and have global reach, so they can tailor solutions to specific client needs.
Local expertise with a global reach. What else sets them apart?
They're very tech-focused. They use digital platforms to improve their service delivery, streamline operations, and create value. Their investments in automation, analytics, and AI help them optimize workforce management, improve customer engagement, and drive innovation.
Staying ahead of the curve with technology. What about weaknesses? Where do they need to improve?
One challenge is keeping consistent profitability across all segments, especially product-led business, which isn't profitable yet.
That's a common problem for companies trying new business models. Anything else?
Managing their large and diverse workforce is another challenge, as is keeping service quality consistent across locations and navigating India's complex labor market.
Those are big challenges. What are they doing to address them?
They're investing in employee training, standardizing service delivery, and using tech to improve workforce management and efficiency. They're also looking at acquisitions and partnerships to expand their services and reach.
Taking a proactive approach. Let's dig into their financial performance. What are the key trends and insights from their financials?
Their financials show consistent revenue growth, improving profitability, and a strong financial position. Their revenue has grown 24% on average each year for the past 7 years, showing they're good at expanding and attracting new clients.
That's impressive growth.
Yeah.
How about their profitability?
Their EBITDA has grown an average of 17% per year over the past 7 years, showing better efficiency and profitability. Their net profit margins are also improving, thanks to their focus on cost control and margin expansion.
So they're getting more profitable. What about their cash flow and capital allocation?
Their strong cash flow lets them invest in growth, reduce debt, and reward shareholders with dividends and share buybacks. Their focus on a healthy balance sheet gives them flexibility to pursue growth.
Smart financial management. How does Quess Corp's valuation compare to others in the industry?
It's in line with their peers. Their price-to-earnings, PE ratio, reflects their growth potential and profitability. Their price-to-book, PB ratio, shows a healthy balance sheet and a strong asset base.
So they're fairly valued.
Yeah.
Now let's talk about risks. What are the main risks and challenges that could affect them?
Well, like any business, they face risks. One is the nature of the staffing industry, which is sensitive to economic ups and downs.
They're exposed to macroeconomic factors. What other risks are there?
Regulatory changes, especially in the labor market, could affect their costs and compliance. Competition is tough, so they need to keep innovating.
Staying ahead of the competition is key. Are there any geopolitical risks?
Yes, their global operations expose them to political instability, currency fluctuations, and trade tensions, which could impact their international business.
So, careful management of their global presence is needed. What about technological disruptions?
Technology is moving fast, especially automation and AI. This presents both opportunities and challenges. They need to use these technologies to improve service delivery and efficiency, but also adapt their workforce strategies to address potential job displacement and skill gaps.
Embracing digital transformation while mitigating risks. Any other challenges?
Managing their acquisitions well and integrating new companies into their operations is important. Attracting and keeping top talent in a competitive job market is another challenge.
Lots to think about. How are they addressing these risks and challenges?
They're keeping an eye on industry trends, assessing risks, and implementing mitigation strategies. They're investing in technology to improve operations and service delivery, diversifying their services, and building strong relationships with clients, employees, and communities to be more resilient and sustainable.
A proactive approach to risk management. Okay, let's wrap up our deep dive into Quess Corp. What are the key takeaways for our listeners?
Quess Corp is a leading business services provider in India with a great track record of growth, innovation, and social impact. Their platform-based model, diverse services, and commitment to technology are driving their success.
They have a bright future. What should investors and stakeholders pay attention to as they grow?
They should keep an eye on their progress with the demerger, scaling their product-led business, expanding globally, and navigating the changing business services landscape.
Lots to look forward to. Before we finish, here's a question for our listeners to think about. How do you think Quess Corp's platform-based model will change the future of work and talent acquisition in India and beyond?
Their model could transform how businesses find talent, manage their workforce, and optimize operations. As technology keeps evolving, platforms like theirs could become even more important for connecting people with opportunities, increasing productivity, and driving economic growth.
That's an interesting thought. Quess Corp is definitely a company to watch as they embrace innovation and shape the business services industry. Thanks for joining us on this deep dive. Phew, we've covered a lot about Quess Corp.
Yeah, they've had quite a journey in those 17 years, and their future looks exciting.
It does. But what does it all mean for you? We've seen their financials, their demerger plans, their social impact. But how can you connect it to your own life?
That's the big question. How can we take these insights and apply them to our own careers, investments, whatever?
Exactly. For example, they're using technology to change how they work and connect with their workforce. Are there any lessons here for how you manage your own work?
Definitely. Think about those platforms like WorkQ and Found It. Could you use similar tools to streamline your work, find new opportunities, or even learn new skills?
Good point. It's about embracing technology and adapting.
And don't forget their social impact. Are you making a difference in your community?
I like that you brought that up. Their commitment to education and well-being is inspiring. It's a good reminder that success isn't just about the bottom line.
Exactly. Supporting a charity, volunteering your time, even just being mindful of your environmental impact, everything counts.
So true. Quess Corp is on a mission to grow, innovate, and make a difference. What will your mission be?
We hope this deep dive has inspired you to think about that. Quess Corp shows what can be achieved when you combine ambition, innovation, and a commitment to creating value. Now it's your turn to take those insights and make your mark on the world.
Well said. We hope you've enjoyed this deep dive into Quess Corp. We hope it's left you feeling informed and ready to make a difference. Until next time, keep exploring, keep learning, and keep striving.